So hello, my name is Daphne from INDUS, and I'm responsible for investor relations. And I'm going to guide you through our company presentation. There's been a lot happening the last month. So as the people that know us know INDUS from having 5 segments, now we have 3 segments, and I'm going to guide you through the recent updates to match everyone's interest. I hope you can hear me well and you can see the presentation well. So let's just start with the INDUS DNA. So what's INDUS? INDUS is a holding company that basically buys family-run businesses that are looking for a successor in the industrial SME sector. In Germany, we call it German Mittelstand. And we promise the companies to also keep their legacy and to actually buy, hold, and develop the company. So it's not maybe this classical private equity image. We rather keep the companies that we have long-term, over 10 to 15 years, and we develop them along the value chain, keep their legacy, and are the #1 specialist for a succession solutions. What our focus is the producing a technology-oriented SME, so around the typical German engineering, infrastructure, and materials segment. And also what we do is we support the companies in internationalizing, for instance, internationalizing their operations. So this is the INDUS core of what we are doing. So to build the ecosystem, what does actually INDUS do? The portfolio companies, as I mentioned, we develop a secure framework and give important input and support each of the portfolio companies we have. We have around 45 at the moment. So meaning we are not like intruding within their daily operations. We are just supporting them along like operation excellence, market excellence, and the holding topics, which I'm going to go into later on. I mean, for shareholders, INDUS is very attractive because you invest in a managed portfolio of technology-oriented industrial SMEs, which you usually don't have access to, because these are niche companies that are usually B2B businesses, be it compression tights or wheels for wheelchairs, that don't have access to the capital markets as such, but are very attractive in their niche, and so you can invest in a portfolio of managed Mittelstand companies. Overall, we are very much committed to sustainability. I mean, acting sustainable is a 4th pillar of our strategy, headed by our member of the management board, Dr. Großmann. And we have a sustainability agenda that's basically introduced within all of the holding companies. Basically, to entrepreneurs, we are fair partner to the entrepreneurs that have actually built their life's work within 10 or 15 years, and that sometimes stay within the business for another period until we find another CEO or managing director for a small Mittelstand company. So this is the INDUS ecosystem, so to speak. As I previously mentioned, this just proves that we put a lot of focus on sustainability. We are externally rated by ISS ESG, among others, and we have a top position. We have a C+ prime status ranking for the 8th time in a row, and we were also able to give out an ESG promissory note last year and the year after, based on favorable conditions of the ISS ESG rating. So we continue to improve and to engage with ISS in the future. Now, as I previously said, I'm going to go into the new into the new strategy, PARKOUR Perform. Previously, it was just PARKOUR. So PARKOUR Perform is the new strategy around 4 pillars and on achieving certain 6 targets in 2025. I'm going to talk about this later. So 4 strategic pillars are around strengthening the portfolio structure, driving innovation, improving performance, and striving for sustainability. I mean, strengthening a portfolio structure obviously is organic and inorganic, meaning by M&A and by non-M&A. I mean, 70% usually is is our organic growth and like 30% inorganic. Driving innovation, obviously, you want to develop these small mid-sized companies via the innovation value chain, because they usually lack the expertise or the funds, and we have a, so to speak, in-house consultant team of engineers that have a PhD in a certain field and that support the small and mid-sized enterprises by driving the innovation agenda. Of course, improving performance is more like operational excellence, like how do you actually make value chains more efficient. Waste is a big topic, for instance, in industrial production. Sustainability, which is also our fourth pillar. So, and also market excellence is another topic. How do you enter markets efficiently? So this is the strategy set, how the company is actually steered. And now, I mean, we are refining our strategy. I mean, we did refine our strategy. What we did is basically we wanted to work out the focus of INDUS, which is technology-oriented companies with the focal points of the industrial Mittelstand. We want to focus on 3 segments that actually illustrate the strengths, such as engineering, materials, and infrastructure, and also like reallocate management resources of 4 different board of management members, and 4 of them are now responsible for different segments of the group or holding responsibilities. Also, what's very important, future fields. I mean, in terms of small and medium-sized companies in Germany, you have this image of old Mittelstand and all these producing companies, and we want to actually make sure that everyone understands we are focusing on future fields, which I'm going to illustrate later, and the growth that's coming from these fields, such as megatrends, sustainability, energy efficiency, and engineering related trends. So also we introduced or made a new performance indicator transparent, the free cash flow, which is also trickled down to each and every subsidiary company. So they're also steered by free cash flow, which obviously gives you much more transparency as an investor. So where funds are put, how we manage between M&A, dividends, paying down debt, and our interest. And overall, we want to remain the specialist for SME succession planning. So that's actually the DNA of INDUS that we want to maintain. So an overview, I mean, the primary targets, more focus on future fields, as I said, mega trends to be aligned within our portfolio, a clearly structured portfolio. The focus is, we previously, and that's most importantly, we had a segment, automotive segment, consisting of a lot of serial suppliers. And the future of serial suppliers, if you don't have the range or the scale in Germany, is very small. So we are selling, I mean, we already sold Visaplast 2 years before, and we got rid of SMA last year, and now we're in the process of selling Schäfer and Seltsam, 2 subsidiaries of our former automotive segment, because it's just not our focus, and the allocation of resources doesn't match up, and the investment doesn't make any sense for INDUS anymore. Also, we had a medical engineering life science segment, consisting not so much of medical technology, but much more of the supply within like wheels for wheelchairs, for instance, Rollco, like a company that does, for instance, compression tights, a company that does sanitary tissues. So it's not the high medical engineering which we have in this for these companies. It's more like consumer goods. So in the end, we don't have the expertise for medical engineering life science either to expand on that segment. So we allocated these companies in this segment into the material segment to make it steered out more efficiently. And also, of course, it's important to support the companies as much as you can, not by operational daily business, because this can be done by the how you call it, Geschäftsführer or management at the subsidiary companies, but it's more like aligning them closer with the holding expectations, with the group revenue and the targets, obviously, that you give to the capital market. So these are the three primary targets behind our strategy update. I mean, from 5 segments, which we had before, to 3 segments. So no medical engineering segment anymore, no automotive technology segment anymore. Clear alignment of management and new KPIs. So how is the INDUS operating system working? I mean, we have the holding company, as I previously mentioned, consisting of now about 40 employees sitting in Bergisch Gladbach, Germany. And you have 4 members of the management board. And we have controllers, an M&A team, IR, PR, plus a legal team, and some other functions that sit within the holding company. And you have the managerial accounting at the portfolio companies, as I mentioned, on holding level, and then accounting, tax, legal, as you can see on the right side. So basically, overall, these functions work together with the segment management, I mean, with the board of management, to improve performance, as I said before, and like drive the sustainability value chain. And the functions like research, development, sales, marketing, procurement, production, logistic, after sales, personnel, and IT systems. I mean, this is the management of the portfolio companies. So this is how the INDUS operating system works. So we don't basically interfere with the daily business of the small and medium-sized businesses. We'd rather focus on the meta topics to drive forward the strategy. To make it a bit more, well, illustrative or visual, I'm gonna show you the new segment and segment management. So clear technological focal points through new segmentation, as I mentioned before. I mean, these are the mega trends I talked about before. I mean, mega trends translate into future fields for us. So for instance, sustainability, meaning we're hopefully acquiring in terms of energy efficiency, energy technology, recycling and waste management. We already have companies in that field, but we want to, only a small amount, I mean, but we want to further allocate resources to that. Digitalization, what does it mean for INDUS? Infrastructure, automation, sensors, and measurement technology? We call it Glasfaserverlegung in German. And mobility and urbanization, infrastructure, networks, and buildings, and demographics and health, medical consumables and aids, agricultural engineering. So what I mentioned previously, we have PARKOUR, we have OFA, which fits into the medical consumables. So these are how the megatrends translate into the future fields for INDUS. So the new segment structure means we're becoming leaner, we're becoming more focused. I mean, the expertise of the management can be allocated, especially in these segments. I mean, in the end, every management board member has a specialized focus. And you can also bring the subsidiary companies together to basically exchange ideas. So in numbers, how does it look like? I mean, engineering, infrastructure, and materials. You can also look on our website to see a bit more in detail what these companies are. Revenue, I mean, like all a bit equally distributed. It looks by now for the year of 2020. I mean, engineering, obviously, what's in there? I mean, it's a classical German engineering around automation, robotics, sensor measuring technology. That's going to be our future field. And we did some very attractive acquisitions in that field. For instance, Heiber and Schröder, Held and Jungmann. So Jungmann is working on these are observatory rooms for industrial automatization processes. Heiber and Schröder is doing packaging, or is working on packaging machines for food packaging, for instance, for the salads and for everything that has a transparent cover, for instance. They're the leaders for basic machines that do food packaging material. So and Held, for instance, which is a very attractive acquisition as well, falls under engineering. Infrastructure, we recently did an acquisition of Quick, which is specialized on in the furthest sense of bridge building, but there we see a lot of mega trends coming from mobility, urbanization, digitization, and sustainability. Obviously, here and there we can see a certain slowdown or a certain muted business atmosphere or a certain climate, but nevertheless we are still positive on all our segments. So materials, what is in there, basically metals, processing, and this is maybe the segment that is mostly influenced by material price changes and energy price increases, but nevertheless very much future-driven businesses that are within there, and we see a lot of well, potential, as well as infrastructure-related networks and energy efficiency. So I highly recommend you look at our website to get a bit more of depth into the portfolio companies which we actually have. So this is how it all looks like. I mean, we have 4 board management members, Mr. Meyer, Mr. Großmann, Dr. Schmidt, and Mr. Reichert, the CFO. So all of them, I mean, all of them except Mr. Reichert, the CFO on the right side, they're engineers or have PhD in engineers and are very much specialized in the field in the segment field. So as you can see, CEO Materials, there will be a new, there will be a CEO specialized on the segment Materials, while Dr. Schmidt, the CEO, will focus on his central functions. Just to give everyone a clear idea of how we calculate the free cash flow, I mean, it's basically the operating cash flow minus the investments, and basically before M&A. So basically operating cash flow minus capex and before M&A gives you a good insight into and steering into how to pay dividends, how to reduce debt, and have more money, or have money for the acquisitions to be made. Yes. Just a bit of background to the financial year 2022. So basically, I mean, despite the volatile macroeconomic environment, which we've always seen, we've had a very good performance for our continuing operations. So I mean, we have the 3 segments that I previously mentioned: continuing operations and discontinued operations, consisting of Schäfer and Seltzer, which are up for disposal. So decision to liquidate automotive technology segment, continuing and discontinued operations with high financial impact, of course, which I previously mentioned. 2 acquisitions we made, Heiber and Schröder and Held, which I previously pointed out in the engineering segment. Double-digit growth in sales, which we could realize in continuing operations, also with a strong part of organic sales. EBIT before impairment was even above the previous year, and the new segment management actually became effective from 1st of January. Sales negotiations for Schäfer and Schedler are still ongoing, and I mean, there's been a good start into the year 2023. So these are the key figures again. So revenue plus 10% to 1.8 billion. EBIT before impairments, we could increase to 5% by 5%. Here also to point out continuing operations, right? EBIT before impairments from continuing operations, and our EBIT margin is 9.8% for 2022. And our target for 2025 is a continuous margin of 10%. Our free cash flow is 101.5 million euro, and we are guiding for more than 100 for 2023. So what's also interesting for you is the dividend. I mean, INDUS is a dividend paying company. There has been no year where we didn't pay a dividend. We always paid a dividend. And last year, I mean, the slide will come after. Last year, we paid 1.05 euros, and now we're paying 80 cents per share, despite the loss we had due to the discontinued operations and the new valuation you have to make due to assets held for sale. For the automotive companies, we are still decided to pay a dividend of 80 cents per share. So as I previously mentioned, there is basically like so economic environment. This is something we can actually skip. I mean, this is something talking about the like how the actual outlook for the German economy is currently aligned. I mean, there's basically like it's a bit of cautious optimism around industry company coupled with restrained consumer momentum. I mean, there's a positive impulse coming from the business climate. I mean, from the IFO index. At the same time, we are seeing consumption being burdened by inflation. So overall, our outlook to the future is positive. I mean, like our start into the year is positive. And so basically, I'm going to show you the guidance. I mean, the guidance for 2023. So for sales, we're expecting like 1.92 billion, and for the EBIT, like 145 to 165 million from continuing operations. What I want to point out that not every analyst has updated their models yet. So if you look on our website, you might be have to be a bit cautious. So as I said, free cash flow above 100 million. Yes, these are basically the target achievements to be achieved by 2025. I mean, as I said previously, portfolio strengthening, megatrends and innovations are inherited within our portfolio. Sales significantly above 2 billion, EBIT margin above 10%, value-based management, of course, by the introduction of free cash flow as a key performance indicator, and regular dividends. We have the policy of up to 50% to be distributed to investors. And obviously, striving for sustainability is in terms of deploying the sustainability agenda within every subsidiary company. So a little summary, basically what makes the INDUS share attractive. We basically represent a technology-oriented industrial holding. Well, we represent the holding company for the technology-oriented industrial companies in the SME sector. We are well diversified on clearly undefined future fields. The portfolio is actively developed. We ensure a dividend payment. We want to grow profitably. And INDUS creates an attractive asset class, as you cannot invest into these small, medium-sized companies through another means than maybe the share of INDUS, for instance. And sustainability is well inherited within our strategy, so as the maintenance of the life's work of the SMEs entrepreneurs. What's maybe interesting for you to be illustrated is a short view on our dividend history. This is all in numbers, what I pointed out before. I mean, we've never missed a year of dividends. We always pay the dividends, and we have a 3.6% dividend yield. So the AGM is on the 17th of May and the dividend payment on the 23rd of May. To conclude, just a small overview of our current shareholder structure. I mean, we have a strong anchor shareholder structure with the Versicherungskammer Bayern, Mr. Selzer, and further shareholders, Wirtgen Invest, Ipina, and the free float says 70.1%, but it might be, in reality, it might be lower because due to the fact that we know our shareholders a bit better than it's transparent maybe to the capital market. There are a lot of family offices, so I'd say 50% of our share ownership is maybe free float, and out of our fixed share ownership, which you can see, most of it is in Germany, and then we have a lot of in our free float, we have a lot of Scandinavian investors that recently increased interest, and the US is also a market that's interested in those shares. So overall, I hope this was a good overview for the audience, and I hand back to Matthias for questions.
Thank you, Daphne. Very informative presentation. There are already some questions in the chat. So the first of all, do you just do majority acquisitions, or do you also do minority acquisitions?
Only majority acquisitions, basically above 50%, above 70%, and then also the Geschäftsführer, the manager of the small medium-sized enterprise stays a bit within the business. Then you create an earnout structure, but it's straight away a majority acquisition.
And another question from a different viewer. So in the segment overview, you showed different margins from 10.2 to 10.9. And in the guidance, it said your goal is to be above 10%. So you basically already reached your goal. Would it make, or is it possible to go for 11 or 12% margin-wise?
Yeah, I mean, this is the long-term goal for 2025. And first of all, sorry, I have to take the annual report where we have our guidance for each segment. So you have to, for 2023, you have to actually consider the each and every influence that can happen within the economy. So considering what's happening in 2023, I mean, we're expecting 9 to 11% for engineering in 2023, 10 to 12% in infrastructure, and materials 6 to 8%. And why is this 6 to 8% within a materials segment? Because there is this possible anti-dumping law coming to Europe, which makes makes the cost base much higher for import exports. So obviously, overall, we've calculated this within our guidance for 2023 for the materials segment, 6 to 8%, which sounds a bit a bit conservative, but overall this is the reason behind it. Yes, and I mean, let's see what also happens with the acquisitions, which we're going to do in the next years. Yeah, I mean, overall, we're still a home of producing businesses. So 10% is a very good margin, but let's see how the portfolio develops. Yeah.
And traditionally, Indus is a buy and hold company. Where do you think is the M&A strategy going? Would it make sense to go for a single exit, or will you just plan to buy more businesses and expand your portfolio?
Basically, I mean, what the management board said, we keep obviously the Indus DNA of buy, hold, develop, but we learned out of the automotive technology experience of the serious suppliers, which we have had in our portfolio for a long time. I mean, we're not going to use the exit as a value generator. That's not something we're doing. I mean, like, we're not going to develop companies and prepare the exit, go do an IPO or restructure them. I mean, we create value by developing the companies around operation excellence, market excellence, driving innovation, driving internationalization. But as the the person who asked the question rightly said, we're going to acquire further, obviously, and then we are not going to put forward the revenue, but more so the EBIT margin. The EBIT margin is very important. We have very strict requirements in terms of our acquisitions. The company shouldn't be indebted, no debt, should make a margin above 10%, and revenue between 20 to 100 million. So growing profitably is the target, yes, or is the DNA of INDUS, yeah. Mm-hmm.
Okay, so we are just out of time. Thank you very much.
Thank you. And if you have any questions, please feel free to send them to me directly. And it was a pleasure to present. Thank you, Matthias. Thank you to the audience.